In a digital age where technology is rapidly transforming every aspect of our lives, the concept of money is also undergoing a revolutionary change. Gone are the days when physical cash was the king of commerce. Today, digital money is poised to take center stage. But what if this transformation is not just a technological advancement, but a carefully orchestrated plan to control and even enslave the masses? What if the disappearance of cash and the rise of digital currencies are part of the grand scheme where governments can rule people's lives through their wallets? This alarming idea is not mere speculation, but a reality that is slowly unfolding before our eyes. How will this new era of digital money shape our freedom, privacy, and autonomy? Could digital money turn us into slaves of the system? Let's delve into this thought-provoking subject and explore the hidden dangers of the cashless society. The disappearance of cash. The disappearance of cash is a phenomenon that has been gradually unfolding over the past few decades. In the United States, the use of cash has been declining at a rate of about 5% per year. In Europe, however, the decline has been more pronounced, with some countries like Sweden and Denmark leading the way in the move towards a cashless society. Why? Well, because the advent of credit cards, online banking, and mobile payment platforms, the need itself for physical currency has diminished. In countries like Sweden, cash transactions have become a rarity, and many businesses no longer accept cash payments. The push towards a cashless society is often justified by the convenience and efficiency it offers. Digital transactions are faster, more secure, and easier to track. So, on the one hand, technological advancements have made digital payments more accessible and convenient. Mobile payment apps like Apple Pay and Google Wallet have made it easier for consumers to pay without cash. On the other hand, governments and financial institutions have been actively promoting the use of digital payments as a way to reduce fraud, money laundering, and tax evasion. However, this shift also raises concerns about privacy, security, and the potential for government control. As one panelist in a discussion on digital money and government control noted, the efficiency justification is fading and the real motivation might be control. Some argue that the elimination of cash could lead to a loss of privacy and autonomy. Furthermore, the elimination of cash could have a disproportionate impact on vulnerable populations. In many parts of the world, access to banking and financial services is limited, and cash is the primary means of exchange. The move towards a cashless society could leave these individuals without a means to transact, further marginalizing them and exacerbating existing inequalities. Digital money as the new currency. Despite these setbacks, digital money, in various forms, is becoming the new standard for currency. From cryptocurrencies like Bitcoin to government-backed digital currencies, the landscape is evolving rapidly. The idea of a central bank digital currency, CBDC, has gained traction in several countries like China and Nigeria. However, the implementation of CBDCs is fraught with challenges and controversies. In Nigeria, for example, the government's attempt to introduce CBDC was met with resistance from citizens who saw it as a means of control. The technological challenges of creating a state-backed digital currency that is unhackable are also significant. The rise of private sector-sponsored stablecoins pegged to traditional currencies offer another avenue for digital money. These stablecoins could function like government-backed bank accounts, but with the benefits of distributed ledger technology. But the development of CBDCs is yet another complex and multifaceted process. It involves not only technological innovation, but also legal, regulatory, and economic considerations. The design of a CBDC must take into account issues such as privacy, security, interoperability, and monetary policy. That's why it requires the use of advanced cryptographic technology and robust cybersecurity measures. Additionally, the CBDC must be designed in a way that preserves privacy while also allowing for regulatory oversight and compliance. Another challenge is ensuring that the CBDC is accessible and usable by all citizens. This requires careful consideration of user interface design, accessibility features, and education and outreach efforts. The CBDC must be designed in a way that is inclusive and does not exacerbate existing inequalities. The economic implications of a CBDC are also significant. The introduction of a CBDC could have an impact on monetary policy, banking, and financial stability. It could affect interest rates, money supply, and the functioning of the banking system. Careful consideration must be given to how the CBDC is integrated into the existing financial system and how it interacts with other forms of money. Government control and surveillance. Now let's move to the most important part of this video, the part you clicked for in the first place. How does the shift of digital money open the doors for unprecedented government control and surveillance? By tracking every transaction, governments can gain insights into citizens' spending habits, preferences, and even political affiliations. Furthermore, governments can impose limits on spending, block transactions, and even freeze accounts. The ability to control spending and manipulate the economy has been highlighted by many experts who expressed concerns about the potential for both public and private entities to leverage digital money for nefarious purposes. In countries with corrupt regimes, such as Zimbabwe, the use of physical dollars has been a way to circumvent government control. The introduction of digital currency could eliminate this avenue, further consolidating government power. What's even worse is that the potential for government control and surveillance through digital money is not limited to authoritarian regimes. Even in democratic countries, the shift to digital money could lead to increased government oversight and regulation. This could manifest in various ways, such as targeted advertising, behavioral nudging, or even outright coercion. The implications of this level of control are profound. It could lead to a loss of privacy, autonomy, and freedom. It could enable governments to manipulate public opinion, suppress dissent, and exert control over every aspect of citizens' lives. The potential for abuse is also significant. Without robust safeguards and oversight, governments could use digital money to engage in unlawful surveillance, discrimination, and repression. This could lead to a situation where individuals are targeted based on their political beliefs, religious affiliations, or other protected characteristics. The shift to digital money also raises concerns about cybersecurity. With every transaction recorded and monitored, the potential for hacking and data breaches increases. This could lead to a situation where individuals' financial information is exposed, leading to identity theft, fraud, and other forms of cybercrime. Yet, the most alarming aspect of the shift to digital money is that it is not just a theoretical concern. Real-world examples, such as the Nigerian government's freezing of anti-government protesters' bank accounts, demonstrate the potential for abuse. The potential for digital slavery is also evident in the way that digital platforms and technologies are designed and deployed. The use of addictive design technology, behavioral nudging, and other forms of manipulation can lead to a situation where individuals are coerced into spending, consuming, and behaving in ways that benefit corporations and governments at the expense of their autonomy and well-being. To sum it all, the digital money revolution is more than a shift in currency. It's a potential Pandora's box, unlocking powers of control we've never seen before. Now, are we marching towards convenience or stepping into a trap where our every financial move is watched, judged, and possibly restricted? The future of money is unwritten, and the pen is in our hands. But as we ink this new chapter, we must ask, are we forging freedom or chains? Tell us what you think in the comments below. This brings us to the end of the video. If you liked it, please consider subscribing and sharing so we can keep bringing more content like this. See you next time.